Thank you very much for tuning in on another conversation related to the Festival of Fund Launches at Franklin Templeton. This is the 8th fund that we are launching in the last 15 months and a fairly unique one from our perspective. We are launching the multi-factor fund in the India business, and there's obviously a very unique approach and strategy that we are going to adopt. Now, this conversation today is, my guest today is going to be Arihant Jain, who is the fund manager for this fund. Arihant's basically got nearly 8 years of experience in multi-factor research and investing. He's part of the advisory team for FTIS, advising the team on global and emerging market funds. Arihant's a CFA charter holder and pretty much eats, breathes, sleeps only multi-factor investing. So ladies and gentlemen, a warm welcome to Arihant Jain. Arihant, thank you so much for joining us on this conversation. And when I introduced you at the beginning, I did speak a little bit about your professional experience, but considering that this is the first time you're speaking to this audience, if you could spend a couple of minutes to get to know a little bit on the personal side of what Arihant Jain is all about and your background.
Thank you, Juzer, for calling me. So I'm born and brought up in Delhi.
Mm-hmm.
Did all my schooling, coaching, all stuff in Delhi, and then did my undergrad from BITS Pilani in Rajasthan, and then joined workforce doing multi-factor investing, as you mentioned, for last 8+ years, focusing on emerging market portfolios within the multi-factor quant-based strategies.
Got it. And multi-factor is all about mathematics. I mean, where did this inherent, love and passion for multi-factor investing emerge?
So when I was in my undergrad, I did a lot of courses in finance, try to understand how to construct the portfolio. There I understand farmer French models, different, how do you construct the portfolio, what's the best way to diversify your risk, how to get the best risk-adjusted return. There I saw the magic of factor investing. There I saw how you can leverage technology, how you can leverage these factors to create best portfolio for you.
Now, this is the first fund that Franklin Templeton India is launching, which is going to use a multi-factor approach to investing in a multi-factor strategy. Can you just broadly walk us through the fund construct for this new fund launch?
Okay, so before that, I think I should dwell into why multi-factor also,
Got it.
right? Because a lot of people know about single factor strategy, let's say momentum, quality, value, but why multi-factor? If you see, factors are cyclical, they rotate.
Right.
This year, let's say, because of all global uncertainties, tariffs, you see low vol factor has outperformed compared to rest of the factor. But last 3 years, it was all about value.
Got it.
But before that, for last 3 years, 17, 18, 19, value was the most underperforming factor. So if you see these factors rotate, so if you invest or bet your money in single factor, that's not the prudent way to invest. That's why you should have a multi-factor strategy in your portfolio. And now how we are different, how we construct the portfolio is we start with Nifty 500 as a universe, and then we construct 4 pillars, which is a quality, value, sentiment, and alternatives. And now within value, let's say a passive fund or a single factor strategy of quality, they might look at 2 or 3 factors like your EPS growth variability, ROE, leverage. We also look at those factors, but we look at more holistically. In quality alone, we have more than 10 plus of factors.
Right.
And few of the, I will say, interesting factors are like innovation. As you know, like most of the returns now are coming from R&D. Like how much we're investing in AI, how much we're leveraging machine learning, NLP, how much you're automating. So that's where these key parameters come in, how much you are spending in R&D. So that's the key differentiator, I will say, if you see how we construct the quality also. Because quality mean different for everyone.
Right.
Same goes for sentiment. If you see momentum, people look at price momentum only, 6 months historical. We look at forward estimates also, what brokers are saying today. So that gives an edge also, because we are looking more forward looking. We have more forward looking estimates in our portfolio.
Got it. I would love if you could touch a little bit about the alternatives factor, because that's something which is fairly unique in the marketplace, and you want to just talk the audience through that.
Sure. So we look at option data, how much interest we are seeing in put to call. Is markets showing various sentiment or not? How much open interest are there? Are we seeing too much volatility in the market of that particular stock? right? Because if the stock is too volatile, it might not be best fit for the portfolio, or we might need to underweight also. So we look at different alternatives. We look at what the managements are saying. We look at what the governance score also. So we also have our own proprietary governance score which we create.
Right. Now, as I've been kind of studying this model myself a little better and more deeply, the one thing that really struck me in the FTIS global team, and which is actually managing nearly 70 plus strategies already in the multi-factor space, I realized that you actually have more people on the technology side than you actually have either doing factor-based research or fund management. Now, can you just talk us through, and I know that multi-factor investing, technology plays, any kind of model, mathematical model, technology plays a very important role, and you want to just talk us through as to why this huge emphasis on 14 people in the team on the technology side.
Sure. So we have the 14-member tech team, as you mentioned. It's more than the investment team, because we want to leverage the big data. We want to make sure we are capturing all the new alpha source we are getting out. We are building new models based on AI, right? We need to make sure we are ready for the future. That's where the tech team comes into the picture.
Right.
And second is, every day they run all these models, all these 70 mandates. We have the real portfolio with us. We have the ideal portfolio through the optimizer, and we get the holistic view of both. And we understand where the cracks are coming in. Is there any trend which we are seeing right now might not be captured in the your real portfolio? So we can capture all of this on a live basis. So it's not like we are running on a quarterly basis or 6 months. By that time, all the data is stale. So we are looking at all the data points on a daily basis. And we have 40 plus sub-factors also, as I mentioned earlier. So we are looking at all of this in a holistic view on a daily basis. They make sure that all of these processes run daily.
So, that's a great, it's a great, actually you've preempted my follow-up question, because when we've been talking to distribution partners and even investors, one of this view is that, well, when you're looking at multi-factor investing or quant-based investing, these are passive funds, but these are not passive funds, right? And you want to just elaborate a little bit on that?
Yeah, I will say model is like you are one human being that is helping me, right? It's helping me to generate data. It's helping me to do some grunt work for me,
right?
And spitting out some stocks, spitting out the real ideal portfolio. Then I look at it. I take a review, right? Is there any particular stock which looks good, which has some red flags right now in the market? Because data takes time to capture all of this, right? You have quarterly, your financials come on a quarterly basis, but we can see what's happening in the market. What's the view of that particular stock in the market? Is there any particular sector trend or industry trend we are seeing? That's where the portfolio manager comes in. And so that we make sure that model is always ready.
So you're essentially saying that you're running this model on a daily basis, you're looking at this portfolio on a daily basis, and wherever you feel the need to adjust, right, in terms of stock weightages, sector weightages, you're taking those decisions pretty much real time and making those changes.
But on a disciplined way, we rebalance monthly.
Yes.
But because we have this technology team, we have the leverage, we can do it on a daily basis.
Perfect. Excellent. So I think, I have just two more questions to ask you. And my penultimate question is, how would we uniquely position this fund in the marketplace?
So the first is like we have the dedicated factor research team. So they make sure that we are capturing all the new alpha sources which we are seeing in the market, your new AI, I will say alpha sources, your new data points, anything that's come to the market. If we see it makes sense fundamentally, because things can good look on paper, but it should make fundamental sense also.
Yes.
So all this hard work, dedicated research team we have, which you will not see in the market.
Yeah.
Right. Second is like we are looking at more than 40 plus sub-factors. So we are making sure that the portfolio has a holistic view. We're not betting on few small stocks or betting on some trend. It's not like a thematic portfolio for you.
Right.
We're trying to create a core portfolio.
Right.
So which will fit in your core investment strategy inside your equity portfolio mandate, I will say.
Right.
And third is because it's a multi-factor with active tilt towards it. So it's always future ready. It's not really based on the historical trends where you're waiting for 6 months to a particular sector to go up, and then you will invest in that particular sector.
Got it.
So it's not based on historical trends. I will say it's more of a forward-looking trend.
Got it. So, ladies and gentlemen, we'd love to do a longer conversation with him, but we have a time constraint. And I mean, first of all, Arihant, thank you so much, for joining us on this conversation. I'm hoping that just the way we've got this tremendous support from both distribution partners and investors in the series of funds that we've launched over the last 15 to 24 months, I'm sure we'll get the same love and support for the multi-factor fund. Before I end the conversation, the NFO opens on the 10th of November, and we love to see all of you all wholeheartedly contribute to the NFO success. Thank you very much, and we shall meet again soon for another conversation on another subject related to Franklin Templeton.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.